Thank you so much for joining us today. This is, of course, a very interesting deal. You're taking on their corporate lending book, which is valued at 1.1 billion rand.
Yes.
So tell us about what this does for the Land Bank and why you decided to go with Grow Capital's lending book.
Thank you very much. In terms of the strategic rationale for going after the Grow Capital or AFGRI's lending book, this is part of the restructuring of their facility. We started in December 2011 when we acquired the farmer lending book, and which was effective on the 1st of December 2011. After that, the second part of the restructuring was the acquisition of the corporate lending book, and the last component of that restructuring was the provision of long-term funding to AFGRI, replacing the general banking facilities they currently have. And in respect of the benefits for the Land Bank, this transaction allows us to actually increase the margins that we were earning on assets that we were previously funding. At the same time, it allows us to grow the book in a relatively safe fashion, while ensuring that we recapture market share that we lost to the commercial banks and other financiers in the past.
So this deal could be valued at up to 6 billion rand in 5 years' time, but
Yes.
not necessarily. Tell us how that works.
In terms of the service level agreement that we've signed with AFGRI, we've set on an annual basis growth targets, which they'll have to meet in terms of the current credit policy, and those growth targets we are confident they'll be in a position to meet.
So let's talk about the state of the Land Bank right now, because you've of course come across from Treasury.
Yes.
You've been with the bank for just over 2 years now, almost 3 years. So tell us about the state of the financial position. A lot of legacy issues you've had to sort out there. Is the bank in a lot better standing right now?
I wish we were having this interview a month later, because we are going to release our results, and in respect to the results, you will see that there's been a significant improvement in terms of our performance. And in terms of a lot of the legacy issues, I think we've made significant progress in trying to deal with the legacy issues. And maybe just to correct you slightly, I'm not from the National Treasury. I used to work there, but I initially joined the Land Bank from Mvelapande.
Okay, so yeah, but previously at one point in your career you worked there.
Yes.
Talk to us about impairments at the Land Bank,
Yes.
because last time we looked in the February numbers, they were reduced by 35%.
Yes.
Is this a trend that is going to continue? Are you able to get that under control into a level that you're comfortable with?
Not to because we're releasing our results in a month's time. I don't want to let the cat out the bag. But let me just give the following general statement. In terms of impairments, I think we're more than comfortable that the level of impairments are coming down. In fact, you'll see the numbers that we're releasing. The loan book is not only growing, but the NPLs are reducing in absolute terms, and that resulted in us actually incurring less impairments that we did in previous years.
I suppose it's very tough to talk finances now, as you say, because pretty much a closed period, as some might say. Yes. So how is the Land Bank positioned now for the future? You've got this Fit for the Future strategy,
yes.
the Triple F.
Yes.
How is it positioned now to then start doing the role that it was initially intended to do? It's in its 100th year. In
fact, at the Land Bank, we've indicated that we would want to actually obtain 35% market share, and that with that 35% market share, we believe that we're going to be a significant player in the agri sector, which allows us to actually drive agricultural policy and to influence the market effectively. And in respect of us being positioned going forward in terms of our Fit to Future program, we believe that we've got an operating model that actually responds to the needs of our customers and all the other stakeholders, which will allow us to grow into the future. 35%
market share of the banking sector or of financial institutions, developing financial institutions?
I wish I could say the banking
sector. I was about to say there. That's an ambitious target. What is that of?
It's 35% of the agricultural debt market in South Africa.
Okay, thank you so much for joining us today. Lebohang Serithi is the Land Bank CFO.